at what's happening to the currency once again. It's going fast. Some of these things are quite amazing because just think about it. Just 28th of last month it was, right? I mean, we were at 80. We were at about 88.50, 88.60. That Friday, I think it was the 20th of November, we blew past those levels very, very fast. 88.80 was that stop. We blew past that, got to about 89.20, and in 5 days flat from 89.20, which was seen to be at that point the new line in the sand, we've gone to now 89.83. I think we got to 89.85 now, and it's come up a little bit from that level. Just a couple of seconds back, I think 89.85 is the new all-time low on the rupee against the USD. So yeah, I mean, I think the fundamental factors are all there, very clear. But I think what's exasperating the move perhaps at the margin is, of course, that the RBI is absent and not sort of providing a little bit of smoothening of this volatility that we're seeing. The smoothening intervention, if I can call it that, if I can use that word. Anindya, Banerjee is with us of Kotak Securities with a quick live take on what he's seeing on his screen. Anindya, of course, has tracked and traded currencies for a long time. Anindya, good to have you with us here. Just a quick word on what you're seeing.
A very good morning, and thank you for having me. Actually, as the USD inches towards the 90 mark, which is psychologically very important, I think what is happening, the market is waiting for a heavy intervention from the RBI. Yesterday, we had seen a bit of intervention, but today, as of now, we have not yet seen major intervention. If now the USD basically moves above the 90 mark, what can happen is a lot of these option strikes could get triggered, be it in the offshore or on the onshore, and that can accentuate the move.
Yeah, and Anindya, morning. I mean, what's also really telling is that this move on the currency in the last 2-3 days, it's not happened like there's a major spike on the dollar globally. We've not even had like a huge basket of FPI outflows in the last 2-3 sessions, very normal. So despite, these factors, nothing major on the dollar, not a major, FPI selling spree in the last 2 days, we've come to these levels. So what's the sense? I mean, is the market reading or sensing that the RBI has made maybe its peace with the 90 level? Because the Reserve Bank has always said they're not here to defend any specific level. They're only here to ensure the market behaves in an orderly fashion.
Right. Actually, what has happened over the past couple of days is there has been a large NDF expiry. Either those positions are rolled over, means short positions, or they have to be covered. So because of that, we have seen an upward pressure. As you rightly said, the RBI is intervening, but not that aggressively. And what it generally creates is an environment where speculators enter the market to make some quick gains. And then they start to buy dollars, especially in the offshore, and that pushes the prices higher. Then it triggers the stop losses, the importers join, and it creates a kind of a trend. So that's why we are watching the 90 mark very importantly, because if that breaks, stop losses can get hit further, and it can accentuate towards the level of 91.
It was looking... Yeah, it was looking a little 89.85 we got to, which is a new low, and it's been pushed back by about 10 paise as we speak. I mean, I think that we should put the live rate up as well. 89.76, so 75. So quick. We don't know, and we'll this 10 paise move, Anindya. I mean, hard to tell immediately, right? What's causing it, but
generally, what we have seen from the RBI intervention in the past, when they intervene aggressively, it doesn't fall 10 paise, it falls heavily.
Yeah, heavily. Okay.
Sometimes the RBI also tests waters by selling little.
Little bit.
That 90 mark we have to watch.
Okay,
Anindya,
Jayesh,
when do you expect?
Just let's get him. Jayesh Mehta as well. He's Vice Chairman and CEO of DSP Finance. Jayesh bhai, good to have you with us here. Good morning. Your perspective on what we are seeing here now, and how would you read it, and way ahead?
So I think, while all the macros have been good, last couple of months has been solid import, both gold and from China. So that has been a great import. And more importantly, whatever the macros are, like if we have daily selling of FPI, right, that cannot be sustained unless the RBI comes and says. And that's what RBI has been doing since last 2 years, right? But I think the pace in last few days or 10 days or so, they have been leaving some gap and let it go, right? So maybe we don't know whether it is deliberate, whether it is because as the trade thing with US, which is still lingering on, it's not moved yet. And also, it also helps a little bit depreciation with China and stuff like that. But more importantly, I think it is the FPI continuous selling without RBI support. When I think there's some NDF which matured, I think that also they didn't roll over. So it doesn't look like anything happening for the heck of happening, but I think it may be letting it go. Because if they want to intervene, they can really intervene in multiple ways. So they are not really bothered doing that at this juncture.
Hi, good morning, gentlemen. Mr. Mehta, I wanted to ask you, what's your view then with regard to the RBI action? The real GDP growth was a little bit better than expected. Nominal is still lagging. And you have this rupee weakness as well. What's the action you're expecting from the RBI in the upcoming meet? We were factoring in a rate cut. Do you think that gets pushed back a little bit, or do you think they go the course and they cut rates?
No, there are a lot of economists, a lot of traders have been saying that it needs to be pushed back and stuff like that. But I think they need to do it because, the inflation being so low, at the end of the day, the mandate for them is to manage inflation, right? When it is above the 6% mark, people do bother about it. And when it is below 2% mark, they need to be bothered about it. So they will have to do this rate cut and most probably very high chances of it unless they may have something else in mind. But more than rate cut, what will really help the market and the bond yields particularly is the OMO purchase. They need to do at least 2 lakh crore till March. And that money infusion is definitely required because of intervention done in the FX.
Sure. Anindya, just to come back to the current technical factors at play, I was looking at the numbers as well. I mean, FPI selling in November actually was very sanguine, just about $400 million of selling. Yesterday, we had about $300 million of selling coming through. Your point on the NDF rollover, at what point do you think the shorts will want to maybe cover or at least book profit? I mean, are there any levels in mind? At what point the shorts decide to have a bit of a rethink?
We have seen when it changes the handle. So let's say from 7 to 8 or 8 to 9, those macroeconomic wise, it has no bearing, but it tends to have a big impact for traders who have positions because there the stop losses are above 90. Somebody may have at 90, 10, 90, 20. And a lot of traders watch for a close. If you get a close above 90, you get a confirmation, and then the speculators join in, and then it becomes a self-fulfilling prophecy.
Yeah, no, that's on the weak side. Anindya, I was talking about the reverse. I mean, if the RBI steps in a heavy way, then obviously the rupee shorts need to start covering. So when does the reverse start? At 90, all the speculators are in the market, and then it just becomes a self-fulfilling prophecy. What about the other end of the trade?
Exactly. So if you see a month back, RBI had intervened very aggressively once, and we had seen a sharp drop, almost like 1 to 1 rupee 20 paisa on just 2 trading sessions. But the point is, yes, below 89, 88, 80, we could see a lot of the stops getting hit. But that could be just a flash in the pan because if the selling stops from the RBI, the stops are hit, then from the next day onwards, again, you will see an uptrend. It will not change things structurally, but it will give you a temporary release. So below 88, 80, a lot of the stops are there of the people who are long on the dollar and short on the rupee.
It was exactly the opposite, right? People were thinking, this is on the 28th when people were comfortably short dollar thinking, this trade deal perhaps is around the corner and you'll easily make some money. But that did not happen. That did not come to pass. And I think that soured a little bit of sentiment on that day when, of course, there was no intervention. There was no supply from the RBI as well. But Jayesh, just to wrap up this conversation, we've got a current account deficit, right? Most, I think, other Asian emerging markets are running a bit of a surplus. Not as a comparison, but just it's all relative. Capital flows, look at FDI, look at FPIs, which Anindya also referred to. That has also slowed down quite a bit. So, I mean, the currency is adjusting to the new fundamentals, right? It'll happen in an orderly way or a disruptive way, I guess that is the question. So, beyond a point to fight the currency's adjustment to these realities perhaps is futile, and that's the view that the RBI is taking, Jayesh bhai?
I think so. So it's like, there was this trade thing getting through, and there was a lot of rupee long dollar short position in the market. And, at some point of time, you cannot continuously keep on spending our reserves, right? And the selling was non-stop. And, of course, we did have last 2 months, we had good imports, both gold and from China. So I think that also did impact a little bit more. And I think if post the trade thing, if the sentiments does not change, if FPI continues selling, I think people will, I think some of them have already stopped their rupee long. People will actually go to other way around, which is dollar long positioning can happen if the things continue to be selling off in equities.
Yeah, absolutely. We'll continue and pick up on some of this a little later in the day. Thank you very much, Jayesh bhai, for joining us. Anindya, it was always great to have you with us on the program. So another new low, 89.85 is the new low for the rupee against the dollar. And of course now it's been pushed back a little bit by about 10 paisa or so. Let's